Okay, let's open for a... Oh, there we go. And somebody had to have made money already. Put this down, right? So for some reason it went... Most traders think the market is chaos, but today I'll prove it's not. Hey everyone, Alexander here. I've been trading for over 15 years, studying market behavior and real-time data every single day. And trust me, every move in the market has a reason behind it. In today's video, I'll show you a perfect real-time example. At 1500 GMT plus 3, the GBP will make a move right down to the second, triggered by the release of the official bank rate macro. We'll break down how this fundamental event creates a strong impulse followed by a retracement and why so many traders take advantage of it in real time. But before we jump in, make sure to like this video, subscribe, and turn on notifications so you don't miss more real data-backed trading insights. Let's get started. All right, my dear friends, fundamental analysis is something that is super easy, super basic. Basically, if you type in forex calendar, right, forex calendar into any browser of your choice, you will get sites like Forex Factory right here, or investing.com, where if you go into, there's earnings calendar. This is something that has to deal with the stock market, but there we go, economic calendar or forex calendar. You're going to be able to get a schedule, an exact schedule of which country will release a particular kind of data, exactly right down to the second. So for example, if we choose this week, right, today is the 6th of November. I forgot what month we're in. That's the beautiful thing about trading binaries or working for yourself, is that you forget what days what days are, what months. Right? Just wake up whenever you want. But whenever you wake up, you are able, with your morning cup of coffee, to get in here. And actually, let's kind of refresh the page, because yes, it's 2:48 p.m. And at 3 o'clock, there it is right here, GBP, Great British Pound, will be impacted by a whole bunch of data. Now, the most important ones that we're looking at is official bank rate, right? So they are saying that previous time, right, we can click on this Manila folder and we see that, it has been dropped in August from 425, or rather, I'm sorry, from June, from 425, right? There it is. It's been forecasted to drop, and it did drop to 4%. And now, well, September, they said, let's keep it the same. And chances are that today they're going to keep it the same as well. Now, the people who are deciding this, these are the, kind of certain members of a committee, and they have certain votes, right? So we have... actually, I think that this is to keep the same, this is to lower, and this is to raise, right? So last time, right, we had essentially 7 people out of 9 said, hey, let's keep things as is. 2 said, let's lower, 0 said, let's raise. And well, the picture was kind of raised, more people were on board this time around to lower even more than 4% perhaps. So, today we're going to be looking at if there's going to be a surprise. Now, what does this really mean? Actually, any kind of macro statistic pertaining to unemployment, interest rates, or I'm sorry, unemployment, inflation, in all sorts of, different versions, productions, the GDPs, all of them come to this moment, right? The importance of this particular macro, it's like getting a bill of health from your general practitioner, right? So if you eat one apple, it doesn't mean you're ready to go into space. If you smoke a cigarette, it doesn't mean that you're, going under. But it just means that there are certain things that maybe we need to keep an eye out. So the other things with regards to speeches from the, central bank representatives, and actually we are going to have, monetary policy. And I think that it's somewhere in a little bit later, should have a... there we go. In half an hour after the release of this data, we're going to have a Bank of England Governor Bailey will make a speech, and this is probably going to be in front of a press, where this right here, it's pre-selected, very carefully pre-selected speech. with regards to here, this is probably going to be somewhere between, in front of certain press where they're going to be asking questions, and maybe there's going to be an unplanned answer that could create some volatility for the GBP. All right, so, and I would say that in approximately 2-3 minutes, we're going to see a timer already come down here, and we're going to be able to hop back into onto our platform, and well, we'll be able to see it. So what makes this beautiful is that I often have people who are telling me, man, I don't have time to sit 3 hours in front of computers studying charts and support and resistance levels. I got 5 kids, I got nagging or loving wife. So basically, there are lots and lots of reasons for your attention, right? And some people, tell me, I just don't have the time. There it is right there, my friend. As I was saying right there, we got 8-minute timer until this is released. So the beautiful thing is that this is not something that's going to carry over for hours, unless it's a shocking kind of information, but it's hardly ever there's going to be something that's so shocking that this particular a particular macro will move the market for hours. Now, what I want to say, though, is that the GBP, it's considered the most volatile of all currencies because, well, Great Britain doesn't really produce anything on a global scale, something that could maintain its economy. I mean, yes, they sell Rolls Royces and Bentleys on the global market, but they're not really drilling anywhere. They're not selling certainly, like oil or wood, or because, it's a small island. And, at one point it was the largest empire in the world, right? 25% of all Earth belonged to but not anymore, right? So when you kind of follow the money, you realize that where does the money come from for the British economy? Well, the banks really. If you think about all of the big transactions, they go through the SWIFT system, and essentially the banks that are in Britain, they're the ones that are able to handle billions, if not trillions of dollars worth of transfers. When, for example, a couple of years ago, if China would have wanted to buy a whole bunch of oil from United Emirates, right, UAE, or just, from anywhere, they would, they wouldn't buy 100 barrels, they'd buy 100 million barrels perhaps. And, how do they transfer the money? How do they make the exchange? Through the SWIFT system, and banks in England would get to keep commission. So anyways, this is where we kind of have to understand that Britain, British pound is considered most volatile because majority of, all of the eggs are in one basket, so to speak. So if somebody is not using the SWIFT system, essentially in regards to Bitcoin or cryptocurrencies, they avoid that particular situation where they have to pay big commissions. And so the GBP could create crazy volatility in that regard. So, but anyways, if you're at work right now, my dear friends, this once again, right now in like 2-3 minutes, you can say, hey, I'm going to go make myself a cup of coffee. Give me like 5-10 minutes. And on your phone, this is a beautiful thing because it's pocket option, right? So it should be in your pocket. You should be able to just, understand what's going to be happening and what's going to be happening. It's at this moment, right down to the second, there's going to be a release of this statistic. There's going to be a whole bunch of buying, and this is where it's going to impact the supply and demand principles, and the asset will rise or fall depending on which direction the positions are opened. But in forex and real market, when the impulse happens, what will people do? They'll generally want to take out their money, right? So they're going to be like, hey, I just made $400. I'm good. So they're going to close the position, again, affect the supply and demand principles, and the asset will retrace. The retracement, I want to say that it always happens, but there are certain situations, of course, where it might happen on the following minute or in the minute after that. And that is actually when there is shocking statistics, a shocking number release, right? So we're expecting that in 4 minutes and 27 seconds right there, there's going to be an impulse. I would say that historically speaking, it should be around 20-30 pips. All right. So it's not something as big as the, usually on Friday, very first Friday of the month, but for 2 months now, the NFP is not being released on Friday, the first Friday of the month at 3:30. But this is where it's usually the most popular macro statistic, and it usually has like 40 to 60 pip movement historically speaking. So we understand that during this time, we are able to even take a look at pending trades. But I will wait. We're going to see when non-farm is released. Actually, we're going to take a look at it after this event. And we'll see actually when during the month they're planning to release it. And during that day, I'm going to make another video to make sure that you guys are on the up and up with regards to the fundamental analysis. So there's not like 20 signals per minute with regards to this. There might be 20 signals per month. Where you might find some time for just, with your phone, with no indicators, no technical analysis, none of that matters really, right? There should be an impulse. We're going to talk through later videos which one of these high impact events, and as a matter of fact, as I mentioned, it doesn't really matter which, all right, wait a second, we got a different time zone here, right? Let's choose the one that's, all right, the 3, there we go, current time, today, so we're looking at 15, there we go, in 2 minutes, there it is, see, the GBP. MPC vote hike, and there it is. So essentially same kind of thing. If you click on this, you should get more information about the event, right? But we're sticking here, there we go, 2 minutes and 30 seconds left until there's going to be an impact on, there we go. Let's take a look at the GBP, and we're going to take the highest essentially paid position, and there we go. So we see we're gonna not need any kind of indicators. And we're just going to give it a little bit more time. All right, so we got 21K. So I'm thinking that we're going to do wait a second, not 5,000, 1,000 position. There we go. And we're just going to wait a little bit. There we go. So less than 2 minutes, my friends, we're going to see an impulse on the GBP. Now, obviously, if you have any kind of questions, please do, like the video, comment. Let me know what kind of questions you have. I have a massive experience. I would love to create this monologue into a dialogue. Tell me what you guys want to hear, what you want to see. And I should be able to, I am going to clarify everything until the point where it's clear and you understand not just why it's important, but, how to take advantage of this as well. There we go. All right, so we got a countdown, in about a minute. So we're going to switch over to, there we go, 59 seconds. So we got 1 minute intervals, right? There we go. We got GBP CAD, and there it is. In 2 seconds, there's going to be a spike followed by a retracement. And this is something that you and I were going to take advantage of. Now, later, as I mentioned, we're also going to take advantage of the pending trades, but not today. I don't think that this is the event to highlight this particular function of the, of pocket option. But there are certain events that we are going to take advantage of. So 25 seconds, we got 1,000. So wherever is going to happen, if it's going to be a spike or a downward or spike upwards, and actually it's important part to make a 1 minute, timer. There's already a little volatility, as you can see. So there we go. We can do a timer now, right? 9, 8, 7, 6, 5, 4, 3, 2, 1. Let's take a look what's going to happen. And there's kind of like uncertainty. There it is. And I'm going to, I missed it. All right, let's go to 2,000. Let's go to $2,000, and I think that, okay, let's open for there we go. All right, for a spike, good God, I mean, this is a massive spike. See, we did a little bit of, actually, I should say that, I would even say that 10K, all right, 10K is not possible. Man, all right, so there should be a bit, a spike, depending on the news that was, and it was actually, see, relative. And we're looking at the other thing. So 5 said the same, more said lower. They kept it at 4%. That's not really good news for the GBP. And when we're looking at this, we are seeing the results. GBP CAD, there is a spike. Now, I would say that I want to actually open a massive position right here. The retracement should happen because this is massive movement, as you can see. This is massive movement. And somebody had to have made money already. Somebody had to make money already. And so we're actually going to break this down, right? So for some reason it went up. I thought that, there maybe would be a positive news for the GBP, but it wasn't, right? So it was 184.56. Actually, to first candle, it dropped to 184. Oh, good God. We're seeing massive impulse. All right, so here we might have made, all right, I am going to see a retracement coming up, but I think that we might have made a position a little bit too big. So retracement always happens. It's just it happens, and it usually happens during the first minute. It's just here, it seems like it's going to be, on the following minute. Not exactly the situation where I would have wanted. Yeah. All right, so the spike happened, right? Usually it's not delayed. So I guess a lot of people were confused a little bit by keeping the rates the same, but there was a more negative, I should say negative direction for the, rate votes, right? So they said that they, essentially 9 members of this committee, they said that, more and more people want to lower interests, right? So this is not really good for the GBP, and exactly what we've seen. For some reason, because the interest rate is the same, maybe certain people thought that, hey, this is good, and they started buying. But then we saw this ridiculous, right, drop, very massive. And it continued to push because more people were kind of realizing what was happening with regards to the votes of these 9 members, right? And that's why this is something that's kind of interesting. Keep in mind that it opened at 1851, or I'm sorry, 84, right? So the fourth digit after the fourth digit after the decimal, that's the pip, right? So we're talking about 84.51, and it dropped to 84.13. So if we take, approximately 51 minus 13. What would that would be, right? 48, so 38 pips, right? So each pip, in like euro dollar, each pip is equals to approximately $10. So somebody made literally $400 over here. So there was a spike. Usually it happens within the first minute. And that's why we kind of want to make sure that we don't throw too big of money around. Maybe $1,000 was actually too much to start with. But, as I mentioned, we don't get this information exactly as it's released. It's usually updated, right? So we started trading. We opened the position, here for a buy because here it's still pending. And retracement will always happen, as I mentioned, when somebody opens a position here. Here they made $200, $300, $400, $500 on a standard lot. They're going to close the position, and when they close it, there should be a retracement. So spike, retracement, continuation. And now it's probably going to do its own thing. When you look at the previous data, you see that, just really how massive this particular candle, right? How massive this impulse really is. So it didn't really make any money, but really didn't really lose anything either. So something that I want you to keep in mind, that money management, this is something that I'm going to go into in greater detail with you guys later. But money management is so important with regards to how this plays out. You don't need 100% success rate, not even 80, not even 90. But when this does happen, when the spike does move, you know about it. You know about it ahead of time. And you essentially, through historical monitoring of this, you'll be able to actually understand what to expect and what to do about it to take advantage of. Now, I got to say that if we did do pending trades, actually, it would have worked out this way. If usually we put 4 pips corridor on the top and the bottom, but we actually would have, or 51, And no, see, actually, in this case, it would have this indecision by the market into which direction to throw if this was good or bad news, actually would have activated both positions. But nevertheless, I will continue to show you this in the future. So stay tuned, my dear friends. And that's exactly what I wanted to show you today. The market is never random. It reacts to real data, real events, and if you know where to look, you can be ready before anyone else. We just watched how official bank rate release moves the GDP almost to the second. Proof that preparation always beats prediction. If you found this video useful, make sure to like, subscribe, and turn on notifications so you don't miss the next breakdown where I'll show you more real market setups and live analysis. Trade smart, stay consistent, and I'll see you in the next one.